Trump is back on the way to the White House, and everyone is asking, what does his reelection mean for multifamily investors? Today, we're going to cut through all the noise and break down the real impacts so you can plan your next moves confidently. Hello, everybody, and welcome back. I'm Paul Macaluso, the Multifamily Renegade. Look, I've built a $6 million plus portfolio from scratch in under 6 years with no partners, no big inheritance, just smart, strategic, value-add multifamily investing. Now, I'm here to help you do the same exact thing. So let's dive in and figure out what a Trump re-election could mean for your multifamily investments. In this video, I'll walk you through how Trump's re-election could shape the future of affordable housing development and multifamily investing as a whole. We'll talk about tax incentives like opportunity zones, how market confidence might shift, and potentially lowering of interest rates. Plus, I'll share with you actionable tips to help you position yourself for success over the next 4 years. Stick around because you don't want to miss this. Let's kick things off with opportunity zones. If you're not familiar, these are areas designated to spur investment in economically struggling communities. The benefit is basically massive tax breaks. We're talking deferred capital gains and potentially paying zero taxes on future gains if you hold the property long enough. Trump's administration was a big proponent of opportunity zones during his first term. Now that he's re-elected, there's a strong chance these tax incentives will either get extended, expanded, or even made permanent. And honestly, this is huge for multifamily investors. Think about this. You pick up a value-add multifamily in an opportunity zone. You put in the work, you improve the property, you help revitalize the area, and in return, you get significant tax savings. This is getting rewarded for doing what you are already planning on doing as an investor. Here's the bottom line. If you're not paying attention to opportunity zones, you could be leaving money on the table. Start researching now and see how they can fit into your strategy moving forward. Now, let's talk about market confidence. Love them or hate them, during Trump's first term, investor confidence was through the roof. The stock market hit record highs, and the real estate market followed suit. For multifamily investors, a confident market is a strong market. It means higher property values, more stable rents, and fewer tenant issues. If Trump's re-election brings back that same level of confidence, it could open up a lot of opportunities for growth in your portfolio. Here's what you need to remember. Confidence creates momentum. When the market feels stable, people invest. When people invest, there's growth. And as a multifamily investor, that growth can be incredibly profitable for us. Let's talk about something that impacts all of us. Interest rates. During Trump's presidency, we saw a push for lower rates to keep the economy moving. Lower rates mean cheaper financing, which is a game changer for multifamily investors. When Trump comes back into office, we could see a similar focus on keeping rates low. And that's your cue to get ready. If you've been sitting on a property with higher interest rate loans, this could be your chance to refinance and improve your property's cash flow. Or maybe you've been eyeing the next deal and waiting for the right time to strike. Lower rates could be the push you need to take action. Here's my advice. Start building relationships with lenders now. The better your connections, the faster you can act when the opportunity arises. All right, so the last topic we're going to cover is affordable housing challenges and misconceptions. Affordable housing, this is a big topic, and there's a lot of noise out there. Some critics say Trump's policies hurt affordable housing development, but it's not that simple. One thing to note is that deregulation, which was a hallmark of Trump's first term, can actually reduce building costs. For developers, this means creating more affordable units becomes financially feasible. For multifamily investors, it opens up opportunities to step into a market where demand for affordable housing is high. I'm not saying it's all smooth sailing. There are challenges, but here's the deal. If you're strategic, if you focus on the right areas and adopt to the changing landscape, you can still come out ahead. The key is staying informed and looking for opportunities where others see obstacles. All right, so here's the big picture. Trump's re-election could bring opportunities like extended tax incentives through opportunity zones, more market stability, and potentially lowering interest rates. But let's be real. Success in this business is about preparation and strategy. You need to be ready to pivot and adapt to whatever changes are coming your way. Here's my challenge to you. Take a hard look at your portfolio and goals. Ask yourself, how can you leverage these potential opportunities to grow your wealth while also minimizing risk? The answer you come up with could shape your success over the next 4 years. All right, guys, that's it for today's video. If you haven't already subscribed to the channel, please make sure you do so before you leave and hit that notification bell because I drop 2 videos per week and you never want to miss out on either of them. So hitting that notification bell gives you a heads up every time a new video is released. If you liked what I talked about in today's video or you had a comment, please leave it below. Share with me your thoughts about today's video or Trump's re-election. Love to hear about it. And thanks again for watching. Give me a thumbs up on that video or a thumbs down if you liked it. Either way, it's all good. The algorithm loves it. So I'm Paul Macaluso, the Multifamily Renegade, signing out, and I'll catch you guys in the next video.